Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the ticker symbols that were in play today. Okay, so first up we're going to take a look at KODK, Eastman Kodak. Okay, so this was a nice bounce today while in an uptrend. It did close up nearly 11% today. It does have RSI up here at 70. It's still in the power zone. You want to see it stay above 70 once it gets above that level. That's a signal the chart's still strong. It has Fasto here in the bull zone at 62. There's still room to run until that 80 overbought level. You want to see Fasto stay above 50 if you are a bull. If you look here at the candles, there was a big close above the upper Bollinger Band here on the 10th, and the candles work their way back into the bands. Notice how this pink line has been holding. Ever since this breakout here on the 9th, every close has been above the pink line. That trend has continued today, even with the gap down open. You can see it yesterday's close was right here. It opened down here and then closed above yesterday's open. That was just a strong move. It hit the next key level intraday and broke above it temporarily. That's the blue line there. The 300-day simple moving average at 986. That's the big level to break. It has to get above the 300-day simple moving average to head higher. If it can, close above that level, the next key level will be the closing price here on the 10th, which is the bottom of this black candle, which is around 1060 or so. Just above, just above 1050 there. That'll be the next key level to break. If you can get above that, then you're looking at 1250 up here at the top of the candle. So it's really crucial that it can break this 10 resistance zone, get above that 990 level. If it fails to do that, it could consolidate more. Now the stop loss level is going to be this EMA 4 at 877. If it closes below that level, it could consolidate, and you could possibly see it come down and test that 200-day simple moving average at EMA 8. As long as the middle Bollinger Band way down here at 491 is holding, this uptrend is intact. It's still in an uptrend in the bullish upper Bollinger Band channel. It's just much stronger if it can stay above the pink line. It's at a flex point right now. More than likely one of two levels are going to break. It's either going to break above that 300-day simple moving average, signaling more upside potential, or it's going to drop below EMA 4, signaling consolidation. So keep an eye on those levels. There was some heavy churning into the close, some big volume. If you look at the weekly chart here for KODK, you will see last week it had that giant bounce and it closed above resistance here. It closed above the 50-week simple moving average. That's the green line at 839. So that close above that level and this dotted purple line, which is the middle Bollinger Band currently at 552, which is also the 20-week moving average. The close above both levels last week signaled that possibly a new uptrend was starting and that there was a bullish change in trend. You could see here for most of 2017, the candles were below the middle Bollinger Band in a very, very strong downtrend, riding EMA 4 resistance lower. So this is a bullish change in trend. The key on this chart is to stay above stay above the 50-week moving average at 839. As long as that level holds, it signals more upside potential, and our next target is the 100-week moving average at 1132. Notice how the upper Bollinger Band is hooking up, and you've got a nice move above last week's close. You want to see a close above last week's closing price to signal that it's continually making new high closes. This is a weekly chart, and this week's candle will not set until the closing bell on Friday. Okay, unfortunately, I lost that chart. Let's try this again here. Yeah, here we go. And so this is AKER. Congrats everybody that caught the alerts on this last night. Check out, it closed up 44%, so it was the big winner today. And this was alerted yesterday, so congrats everybody. And we did alert this at lower levels in the chat. As you can see, RSI is not above 50 and it's in the bull zone. You do have Fasto at 97, so it's signaling temporary overbought. Nice bull cross on plus DI on ADX there. So this has been on a nice multi-day run since forming this channel at the bottom that we talked about last night. It got above the bottom of the gap level, which is this green line, and it's heading up towards the top of the gap. So that's the next big level to break, which is the bottom of this candle on the 18th. Now there's one obstacle in the way, and that's this purple line, which is the upper Bollinger Band currently at 30 cents. Many times when the candles start at the bottom of the lower Bollinger Band and work their way up to the upper Bollinger Band, that signals a temporary top. So if the share price stalls out here at the 30-cent level, you could see it pull back. There is a small gap between high of day yesterday and low of day today. So once it finds resistance, we will be looking for that gap to fill on a pullback. So it would be, the chart would be much much better if there was not the gap on the chart. You know, that gives the market makers a target to pull the share price back to. Now, if it busts through that 30 resistance level, then look for a run up here to this upper Bollinger Band right around 37, or the top of the gap around 37. So that'll be the next big target. And just above that is the 50-day simple moving average at 41. Keep in mind, this was on a 4-day run, and then look at the big volume spike today. Look the last time there was a 4-day run. Okay, so similar volume here, and look what followed. So you had actually 5 green volume bars in a row, followed by a big climax spike, and then a red volume bar. So here you have 4 in a row, the big volume spike. There's a possibility a red candle could form tomorrow if this pattern repeats. It's always that big climax type spike, but this is a very strong chart, and it could keep pushing higher all the way to that 50-day simple moving average. As long as the 15-minute chart is strong, the signal is to keep riding. It's just once it hits resistance on the daily chart, you have to be ready to lock in gains if it fails to break resistance, if you're looking to trade and not holding longer term. Okay, let's look at CVO here. Closed up 33%. This chart's heating up. You've got RSI now up at 67. So this had a nice breakout today. It has a huge volume spike. As you can see, it was turning the middle Bollinger Band and the 50-day simple moving average into support. That's the dotted purple line and the green line. And then today it made that big breakout higher above high close horizontal resistance. It was the closing price back here on the 6th. That was the key level to break, or the 5th, and on that 120 resistance level. It broke above, and now it's hitting the next key level. It closed just above it, which is the closing price on November 28th here, the top of this white candle. If it can break above that, then you're looking at a possible run up here to this November open, which is right around 182, 183 or so, and then the next target's going to be the 100-day simple moving average at 198. If this uptrend continues, it should work its way up to that 100-day simple moving average. Today's candle did close well above the upper Bollinger Band. You could see the candles work back into the band, similar to this move right here. If that happens, you want to see EMA 4 at 124 support hold. Okay, let's take a look at ATOS here. So this was a nice move today. Yeah, let me get the annotations going here for everyone. Closed up 33% or 42%. I stand corrected. Yeah, it had that really strong close. They were pulling it back. This is a thinly traded stock. You can see the average daily volume is super low on this play. And then today volume came in. Notice the PSAR bull flip. The green dots are now below the candles. And so what we were looking for intraday was a close above that green line, which is the 50-day simple moving average at 31. It looked like it was going to close above, or it looked like it was going to intraday, and then it pulled back, and then it was like questionable. They came down and took out stops. And so, yeah, I know some people got taken out down here in the 29 zone. Just keep that in mind. If you have a tight stop on a penny stock, you're likely to have the market makers drop that share price and take that stop out, and then run the stock after you've been stopped out. It's a brutal game. It's safer to use a mental stop loss, but you have to stick to your discipline, and you can't be undisciplined if you use a mental stop loss, and you have to sell if it breaks that key level. So the big move above the 50-day simple moving average does signal more upside potential. Notice it did close at high of day. There's no upper wick on the candle, and it did close above that upper Bollinger Band. If you see it pull back into the bands, the main thing, it has to stay above the 50-day simple moving average. As long as it stays above 31, that's signaling that it wants to head higher. So if it's at 37 now, if it pulls back, holds 31, and tests that level, that could be a reload level if you missed it, as long as support holds. Now to the upside, it needs to break above 42 and 46. If it can close above that 200-day simple moving average at 46, that'll be the big signal that it wants to break out higher. It looks like right now it wants to at least test that 100-day simple moving average at 42. It's going to need to break it to make a bullish move higher. And yeah, you can see here, yeah, the chart's just heating up. Yeah, we'll see if it can break out higher. Now take a look at SIEB. Closed up 15% today. A thinly traded stock, only 187,000 shares. You have RSI back in the bull zone at 53. You have bullish crossover on Fasto. Now it's back above that 20 oversold line. So this had a nice bounce today. It had broken below the middle Bollinger Band here and started this downtrend, and it worked its way to that lower Bollinger Band. So it basically went from being above the upper Bollinger Band and the candles working back into the bands all the way to the lower Bollinger Band, similar to what I was talking about earlier, but in inverse. And so just like how when a stock starts at below the lower Bollinger Band and works its way to the upper Bollinger Band, and that's the sell zone, when a stock is above the upper Bollinger Band and it works its way to the lower Bollinger Band, that is the buy zone. So it's the the same theory. It's just inverse. And so basically, this was signaling to load down here for a bounce play. It was down 4 days in a row. It closed just above EMA 4 at 1362. It's only in play if it can stay above that level, and then it has to break above EMA 13 at 1415. That's the orange line there. If it can get above that level and then above the middle Bollinger Band at 1533, it can get a new uptrend going. If it fails to break above these EMAs or that 12 support level down here at the lower Bollinger Band fails to hold, if it fails to follow through here, then you could see a drop down to that 50-day simple moving average at 889. The red flag on this chart is this big gap way down here. So, if the chart breaks down, they could drop it down to that 200-day simple moving average at some point and fill that gap. It's risky because it's now in a downtrend. Stocks forming candles above this dotted purple line, which is the middle Bollinger Band, are in an uptrend. And once they drop below, they're starting a downtrend. And so, this has to get back above that middle Bollinger Band to get a new uptrend going. Okay, let's look at ARGS. Closed up 15% today, so very sweet move. The stock is heating up. Okay, so this is one that's been, it's a frustrating type of stock because it keeps on acting like it wants to break out and it doesn't happen. So you can see here R sign Fasto, they need to get above 50. And so basically this has been consolidating for the last couple months. They had the ugly black candle back here on the 13th, and we call it ugly because it signals that it was a bull trap. Anybody that loaded up here, this was the open way up here and it ran to high of day. Anybody that loaded in this zone and held were underwater, and notice it never got back to that level. So it's just always risky to hold when that black candle forms. And so yeah, it's been trading sideways down here. It found some support and it finally bounced. And so today a white candle formed, and so we're going to be looking for potential follow through tomorrow. It's got to get above the 50-day simple moving average, which is currently here at 16.7. That's this line right here. Let me get the circle. And so if it can close above that level, it hit that intraday, that would be a good start. And then it has to get above the 100-day simple moving average at 17.3. So basically, if you can get above the 17 resistance zone, close above that level, similar to how it did right here, that'll be a signal that it's heating up. I would wait for that move to even think about jumping in this, because you could get stuck holding and waiting for this. You want to see that break above resistance, and then it has to get above 19. The bullish change. Notice that it failed to close above the 100-day simple moving average here, and the last close above that level was right here on the second trading day in January. But that's really the only close in recent times that it's closed above that 100-day simple moving average. So if it closes back above that level, that should be the bull signal. So we're looking for a break above 17 and then a close above 19, and that should signal that it wants to head higher. If it fails to break resistance, it's not ready to go. Okay, if you enjoyed this video, check us out at our chat. I'll post the link below the video. And it's a great opportunity to come and learn in a friendly environment with like-minded people. It's just good teamwork. Everybody's helping each other. And it's a great place to come and take your game to the next level. Okay, thanks for viewing this video. The link will be below the video. Thank you.